hello there in CREtech land, it's Michael Beckerman. I'm really excited today because I'm doing a vlog, a video version of my blog with Bain Capital Ventures. And you know, I write a lot about how I feel like I've got the greatest job in the world because I get to hang out with some really interesting, innovative people in commercial real estate technology that are doing some extraordinary things in terms of the evolution of this massive, massive industry. So I've been blogging for a few years and talking to some really interesting folks from the entire ecosystem, startups, developers, brokers, venture capitalists, angel investors, private equity. And every once in a while I come across and I connect with somebody that really is just a really important connection in this industry that we're all working so hard at building. And I say, you know, what can I really do to shed light on what this person, what this company's doing, and write about it. But you know, I get opportunities to meet people like Matt and his team, and I say, you know, I want to videotape it. I want to record it so that, you know, my audience and the entire CREtech community can see it and learn from it. And so it's a great, great pleasure to introduce you to Bain Capital Ventures. And we're here on a beautiful day in New York on Broadway, where all the cool kids hang out. It's very, very... And
also us.
And I'm with Brian, David, and Matt, and we're going to spend some time talking about, learning about Bain Capital Ventures, talking about some of the investments they've already made in the CREtech sector, how they feel about the industry right now in terms of where we are, and some thoughts about where we're going as an industry and where they're going. So sit back, enjoy, and we're going to talk CREtech with Bain Capital Ventures. So it's a pleasure to introduce Matt Harris. Matt, maybe you could start introducing yourself, what you do here, and then we can work around the team to David and Brian.
Sounds good. Well, first of all, thank you for being here. Thanks for watching. It's amazing to me, given how long I've been doing this, that, you know, CRE and tech are two concepts that go together in one show. You must find that, given your history in the space, a surprising new development as well. But it makes perfect sense to us, and it is very consistent with the themes we're seeing around fintech. So my background is I started at Bain Capital in 1995. Bain Capital at the time was a private equity firm. Now we do across 5 asset classes, alternative investment management. So private equity, public equity, credit, real estate, and I'll get back to that later, and then venture capital, which is what the three of us here do. I started my own firm in 2000 called Village Ventures, decided to focus on what's now called fintech, this wave of innovation in financial services that started really in the payments world and then swiftly progressed to lending and investing and insurance, and then here recently, quite intensely, into real estate. And so we here at BCV, I came back 6 years ago to Bain Capital to join the venture group. We do everything from early stage to growth equity investing, anything from $1 million to $100 million across that whole landscape of financial technology, as well as other segments, but this team here is focused on fintech. And real estate's been our hottest area lately.
Great.
From residential to commercial, we're seeing vast amounts of opportunity.
Great.
And I work frequently with Brian Goldsmith, who's in Boston today, but we have him here looming on a giant video screen.
I was going to ask the question of how much bigger I am on the screen than you guys in Europe, but it sounds like a lot.
A lot.
Ginormous.
Thank you guys for including me as well. I'm glad I didn't zoom in the camera any further to really just show how well I shaved this morning. So by way of background, I'm a principal on our team. I joined the Boston office here about 6 years ago, and I spend my time focused across financial technology and vertical software. And CRE, commercial real estate, and real estate broadly is one of those places where there's a really nice intersection, where we're seeing a mix of data, software, in many cases a combination of both, payments, asset management, all converging. As one of the kind of biggest sectors in the economy is now starting to see some really nice tech innovation. And so I've worked with a couple of our companies in the real estate technology space and in the CRE space in particular, and
Absolutely. David?
I joined Bain Capital originally in 2009 on the private equity side, worked on one of Bain's larger early commercial real estate transactions, a business called International Market Centers, which owns about 11 million square feet of real estate space for the furniture industry that was recently sold to Blackstone. But spent most of the last 5 years at a real estate technology business called Compass. On the residential side, helped build that business from pre-launch through the Series E, and was fortunate to have the opportunity to return to Bain Capital to work with Matt and his team in looking at opportunities, the evolution of the space. We wrote an article about that as well, and it's an exciting time to sort of have some credible expertise in the space, so I think a lot of things are coming together to create more opportunity both on the investment and on the innovation side.
Great, terrific. Well, thanks guys, thanks for the time. So let's jump in. So Bain Capital, 95 billion or so under management, venture group, 3.5 billion or so, right? So why commercial real estate, why real estate in general as a category right now? I mean, what about this climate right now gets you so excited about being, involved in this community?
Well, we've been tracking and investing here and there in real estate technology for the past decade. And actually, David mentioned an article that he primarily wrote where he maps the history of this. And we were interested in the first wave of real estate technology, which was enabling technology to let brokers do their job better, to let owners do their, et cetera. What really caught our interest was the second wave. Companies like WeWork, companies like Airbnb on the residential side, Redfin, Compass, Cadre, Roofstock, companies that were not just enabling existing players, but really challenging the status quo, whether it be in what we call space arbitrage models like WeWork and Airbnb, or investment marketplaces. Those companies have gone on to create tens of billions of dollars of value. And so caught not only our attention and imagination, but the imagination of an industry. And that's led to the phase that we believe we're in now. Again, paraphrasing some of David's great work, which is where the incumbents are paying more attention than ever. And the spirit, I mean, this is the tailwind behind your business as well as our opportunity set. The incumbents are spending more money, spending more time and energy than I've ever seen. Commercial real estate, not known historically as a field with great amounts of innovation. And great amounts of energy, frankly, for change. But that's changed. And so vendors are springing up everywhere, and changes in the air, and that's opportunity for venture capitalists.
I'm in this space 7-8 years, and those of us that have been in that long, really in the trenches, we talk a lot about just in the last 12 months, just the extraordinary amount of just funding, new startups, traction, like as you said, Matt, like the developers and the landlords and brokers really paying attention now, more than I've ever seen. When you guys think about, because you see so many different industries, when you think about CREtech, is there another sort of industry that you could kind of look at it and say, that's sort of the playbook that's going to follow? Is it fintech, which I often think there's a lot of things that it has in common with fintech. So are we similar in that regard? Are we following that tail? What's another industry that you think this feels like that you've been around?
Well, I'll take this one as well. To me, it feels very much like fintech, and even within fintech, you see quite distinct time frames associated with payments, lending, capital markets, all the sub-segments, but they've each followed roughly the same pattern, which is the incumbents ignore technology. They have their picked vendors and they pay them as little as possible. And then a crop of entrepreneurs create some startups that challenge the status quo. Like a lending club or a SoFi in the lending space, like a Stripe or a Braintree or a PayPal in the payment space. And then the incumbents realize they can't ignore it any longer. And they start leaning in, becoming much better customers and partners to third-party technology companies. That's the arc of human history, probably. Certainly the arc within the subsegments of fintech. And that's where I believe we are, is just at the tail end of that third phase, as David put it, within real estate more broadly and commercial real estate specifically.
Is that how you guys see it as well?
I think there's similarities in healthcare where there's a physical component to it historically. You've got a very decentralized market of owners in the space. And so while there's been a lot of capital on a relative basis that's been deployed, when you think about how core technology is today to the average real estate experience, whether it's on the multifamily side or it's a commercial tenant, really early innings on kind of where things can go and the uniformity of data and then what that unlocks over time.
Right.
And the other one that I've described as having kind of a similar three-way evolution is human resources technology. And so if you look at some of the early models, it was about bringing software to large enterprises to better manage whether it was hiring or employee management or benefits or whatever it might be. And then we started to see this second wave where we've increasingly seen marketplaces for talent and alternative employment models. We're seeing those across a bunch of different sectors with sort of the freelance or gig economy. And now we're starting to see a third wave where you still have some of those marketplaces, but you're also seeing a reemergence of technology to serve specific segments and kind of more niche problems within human resources. So whether that's hiring for a specific vertical like commercial real estate or automotive dealers, you name it. So we do see a lot of this kind of similar evolution across other sectors as well.
So given that dynamic of healthcare, HR, fintech, where do you see that we are at CREtech specifically in this life cycle, knowing what, how other industries have grown and matured in the tech sector? Where do you think we are right now, Matt? Like, how would you describe this current climate?
I think we're in the exploration phase of the incumbents. These big owners have gotten used to the mantra of location, 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 and that's how they've made their money, is on the buy. And then they've been able and content to sort of own these things and reap economic rents, literally and figuratively, over time.
Right.
It takes a while to dislodge a very wealthy and satisfied set of people from their habits. And their habits involve a lot of paper and pen. And so we're in the early innings of that. They're making a lot of the right noises. We're seeing major owners participate in venture capital funds, do their own direct investing, set up accelerators. And again, their procurement of new technology has gone from, I'll see you in a century, to come on in and tell me what you can do for me. But there's still a lot of behavior change. And one thing I'll say is the leaders of these organizations have got religion generally that things are changing. The mid-levels are kind of hoping to retire before they have to change anything. And there are exceptions to that, but I would say that's where we see a lot of startups who say, I had an incredible meeting with the guy who owns Boston Properties, the guy who runs it. And then you just hit the morass of pushing it through.
It's got to get adopted rank and file.
Rank and file. And so I think we're in the first or second inning, and I think startups should buckle in for a slower ride than perhaps they anticipate.
Which is kind of the message that we've been hearing and advocating as well.
And the open questions, we've had a really long bull run in real estate markets generally, and so fewer buying opportunities, more cash generation, more opportunities to do these sort of extracurricular innovation type pieces. Depending on sort of what that cycle looks like, it'll be interesting to see whether some of the better capitalized folks use it as an opportunity to invest more and expand and leverage it across a broader portfolio, or whether there's a whole-scale pullback on, I think, the attention being paid right now.
Got it. So where does then Bain Capital Ventures sort of play in the sandbox, right? I mean, you're one of the premier names in the private equity venture world. The reputation speaks for itself. It's an extraordinary brand, really. So now you're in the sector, you've made a couple of investments, you're probably looking at a lot of deals. Where do you see your sort of sweet spot in the ecosystem?
Well, I'm going to hand it to Brian in a second to talk about some of the things we've done, particularly Reonomy, which is a company we know them strongly
very well.
But I'd say the short answer is we go where the entrepreneurs are. We have certain incumbent advantages. I mentioned we brought over the Harvard Management Company's real estate team. And so having that internal expertise to point us to where innovation is happening and then helps to validate what entrepreneurs are telling us, it's one of the things that we've really enjoyed here recently. But at the end of the day, our business is serving entrepreneurs, helping them build big companies. So we end to be, rather than having a thesis and
Right.
proceeding down a path regardless, we end up having big ears around here and listening to what entrepreneurs are telling us about what they're doing.
Right.
And that's really the story of Reonomy. Rich Sarkis
Yes.
is someone we've known for a very long
Yes,
time.
we're big fans.
And his story of Reonomy has been a fun one. Brian, you want to just give the sort of
Yep.
90 seconds on Reonomy?
Yeah, so we met Rich probably 2.5, 3 years ago and ended up leading about a $10 million Series A investment into Reonomy. And I think that the problem that Rich rightly identified was there's this opaqueness to who actually owns commercial real estate. Things are hidden behind LLCs and more LLCs and more LLCs. And in reality, if you want to take action, whether you want to be a buyer or investor in commercial real estate, whether you're a broker or whether you're a lender, you need to be able to get through that opaqueness and figure out who actually owns a property. And so what Rich said is, if we can bring together all this messy data into one spot and enable each of those three constituencies to have better visibility into the true ownership of a property, there's all sorts of interesting things you can do. And so just as an example, when we first met him, he said, imagine you're an investor and you have a thesis around properties on the Upper West Side of Manhattan, say between 70th and 120th Street to the west side of Central Park. And you wanted to go find all the properties that hadn't been transacted on in the last 5 years and had available air rights, meaning they were, say, a 4-story building and they were allowed to be built up to 6 floors. You'd have to literally have your analysts go walk the street
Canvas, yeah.
and notice, hey, this building has 6 floors, the one next to it is 3, and the one next to that is 6, and then try to figure out who owns it so you can get to the bottom of trying to lend to or buy or broker that property. And so that's just one example of where they've spent time. But we think that businesses that take the combination of unique data assets, put a great workflow software layer on top of it, and then ultimately have the data get smarter and smarter and smarter as more people interact with the system, can build these really big, powerful businesses that have pretty differentiated kind of moats around them over time.
Right.
And so Rich and the team have done a really nice job of that, starting first in New York and now with a national product that's being used not just by brokers and lenders and investors, but increasingly by a broader set of folks who want to engage in the commercial real estate space.
You guys have also been in, I think, roof stock?
Yeah, so one of the other things we've seen is that the buying and selling of real estate assets has historically been wildly inefficient.
Right.
On the large commercial side, we looked hard at Cadre, who we think is the leading company in that space. But in the single-family rental category, which is sort of newly institutionalized, when Blackstone started Invitation Homes 10 years ago, there's really no good way to buy and sell a leased home. So Roofstock is an investment marketplace where you can list and purchase a home as an asset, fully leased, with property management, insurance attached, fully certified, rather than emptying it or buying it empty, as had been the traditional practice. So they've scaled from, we invested before they launched, they went from 100 million in their first year to $1 billion in their second year of volume. This is their third year. We have high expectations. So it's a great team, but again, it's what you see sometimes when you bring modern technology and techniques to a really archaic field of endeavor, is that the adoption sometimes can be really rapid.
Or really slow.
Or not at all. So again, free launch marketplaces are scary. This one happened to work.
That's good. Now those are two, Roofstock, Reonomy, those are 2 stars in sort of our ecosystem, right? And they're thriving and they're scaling and they're doing really well. Now, some of the narrative of late and some of the trend lines have been that the early stage is the one that's really not getting a lot of investment, and it's going, the deal volume, the total investment volume is way up, way up. Number of deals is down, and it's later stage. So how does Bain Capital Ventures look at the early stage, the angel, the ones that, like Reonomy before it became Reonomy? I mean, do you look carefully at that market? Are you something you're interested in?
We do. So, Roofstock, when we did it, was 12 people in pre-launch. We just did another on the resi side, a company called Ribbon, 3 employees. $500,000 check. So we like getting involved at that stage. Certainly our biggest winners as a firm have been when we leaned in early. To us, I would say the quality of the entrepreneur means everything at that stage, particularly when you're just backing sort of a vision and a team. Our threshold for how high quality the team has to be is even higher.
Right.
It's easier when you have, $3 million in revenue, $5 million in revenue to say, okay, the thing worked.
Right.
We can assess the quality of the team through their results. But when you're really just backing a PowerPoint, and so that's why it's a narrow aperture to get through, is that at the seed stage, we're really looking for truly world-class teams because they've yet to show us progress in that company. And the other thing is, a lot of early stage in the CRE tech space has a hardware component to it. They're monitoring water flow, or they're doing novel access control, or sensors, smart buildings, energy demand response. I mean, these are really important things, but incredibly risky in the execution. It's not just about building elegant software or creating a marketplace venue. It's about the challenges of the physical world and hardware in particular.
Right.
And that, I would say, across our decades of history, hardware has been a couple order of magnitudes more challenging than software.
Got it.
And I think most people have learned that lesson as well. And so I think part of the reason that this phase of commercial real estate, early stage, may be trickier is that the hard problems that are being addressed are hard problems.
Right.
And venture capitalists get a little leery of the risk that comes along with hardware.
Got it. So my tribe, I spend a lot of time with founders and those that have the next Reonomy on their horizon. And often it's like, so what do I need to know to get into a Bain Capital Ventures or to get on their radar screen? So my question is, for them, is it this startup ecosystem, how do they get here, right? And what is it that you're looking for that they need to put in front of you? You go, guys, we should take a look at this one. I mean, so what are you looking, how do you get in here and what do you look for?
David's raised more venture capital than anyone, most people I know, so maybe you can, how do you do it?
I think, one thing that's important is there are certain businesses that are innovations in real estate that don't necessarily need traditional venture capital to fund. I mean, I think there are more and more family offices, real estate strategics, et cetera, that actually can be helpful because the expectations are more around how do we generate cash flow in the near to medium term versus just exponential top line growth, which I think actually can create challenges for some businesses if they're not really built to scale in that way with technology at the core. I think ultimately, for those businesses that are close enough, figuring out a narrative that fits within a traditional venture type box. So for instance, with Compass, I figured out that by talking about a SaaS-like model, where we ultimately focused on having an enterprise sales type sales force going out, recruiting agents, bringing them on, a predictability in their revenue over time, and starting each year with, aside from major market fluctuations, kind of that core base of revenue day one, that resonated more with some of the pattern recognition of traditional VC. And so I think understanding what model you want to have and then trying to figure out how what you articulate can be understandable to people who may be excited but new to thinking deeply about some of the components and challenges of the space.
Right, because the metrics are very different in this space than a consumer space or even a B2B like healthcare or HR. I mean, the numbers are just smaller here in terms of adoption. There's just not as many people working in this ecosystem, but the dollars, the aggregate is huge. It's freaking enormous.
Right.
So what do you guys look for in terms of like that scale word? I mean, what's important to you in terms of how big and what type of return? Does that factor? Obviously it has to, into what Bain Capital Ventures will look at? The financial dynamics?
It certainly does. I mean, we're looking for opportunities that can have a big impact for the entrepreneur, for their customers, their employees, and for us. And that's why, as an example, one of the areas we like are these businesses that can build really unique data assets, because if you become the best source or the only source for certain types of data, you can get some really interesting network effects where more and more model becomes more valuable for everyone, and it opens up the number of folks who want to interact with the platform. So that's definitely one of the kinds of things we look forward to be able to see really big opportunities.
So are there particular food groups within the CREtech community or landscape that you like Matt, you said hardware was something that you learned that's tricky. Are there other parts? I mean, data with Reonomy. I mean, what other parts of the ecosystem do you look at and think that are interesting right now?
Let's talk about a couple. So David said something important that I want to highlight here, which is that the ability for an entrepreneur to contextualize their business in language that we understand is really important. You mentioned SaaS. Venture capitalists are obsessed with recurring revenue.
Right.
So if you can contextualize your business, right? So who is it? Starting the year with a book of business versus at zero, good thing.
Yes, good thing.
So learning to understand how VCs think and contextualizing it in terms they understand is a good thing. One thing I would avoid is saying we are like X for Y.
Yes.
So I can't tell you. So we
note that.
Well, I mean, we make lots of mistakes. I make lots of mistakes. One mistake we made is we work as an investment opportunity pretty early on, and we passed. Okay. And part of me will never really recover from that, given the value.
You're not alone in that regard, I'm sure.
I agree. But after we did one of their landmark financings, there were dozens of people coming in here and saying they were the we work for X.
Or the Airbnb.
Exactly. So generally speaking, there's a fine line between, as David said, contextualizing your business in terms we can understand on one hand, and caricature on the other hand. And so I would stay away from the caricature, which is basically derivative. Saying like, we're nothing new, we're just like this other thing, but for a smaller market.
Right.
Generally, that doesn't sing.
Got it.
Because we are looking for major companies.
Right.
Our internal shorthand is we like to deliver $100 million of investment return on every deal.
Wow.
So if we own 20% of a company, that's a $500 million company in terms of the outcome.
Got it.
Not for the faint of heart.
Right.
And so that's a threshold that we try to be disciplined about. And I think for entrepreneurs, building a $500 million or $1 billion company, not every idea, should have those level of aspirations. It doesn't mean it's not a great idea or even a great business.
Right.
It's just a question of fit.
Right. Well, it's clearly doable. I mean, there's the existing behemoths in the category have achieved that and much more.
Exactly.
So it's not it's fantasy land. I mean, it's definitely something that can be scalable at that level.
That's right.
But what categories? What categories do you like? I mean,
so we generally think one broadly defined space is sort of business management. So we think that property management and the business management for commercial real estate is still a couple revolutions behind the average industry. So we have a company, for instance, called Avid Exchange. That's on the accounts payable side. They serve many industries, but their biggest industry is property management. They've learned that these people get a lot of bills. They got a lot of invoices coming in. If you go into the average property management shop, there's a lot of paper coming in. There's a lot of paper invoices coming in that have to get approved by all these different people. Avid takes that, automates it, pays the bills automatically, reduce a lot of cost and risk of fraud. So across the spectrum of business management in this enormous vertical that is commercial real estate, we think in terms of the way they interact with clients, the way they invoice clients, the whole client experience, not beer kegs and sort of like lipstick on a pig stuff, but the actual business process of recruiting and managing clients and retaining them. Again, industries in this sort of subscription economy, recurring revenue economy, have upgraded their accounts receivable and customer success functions. Commercial real estate has not yet.
Correct.
So I look at these businesses and say, look, there's beautiful software that customized and tuned to your vertical can transform your business. And I think we're at the stage where there are buyers for that software.
Got it.
And that's a major theme.
Okay.
And just to point out one thing that Matt mentioned there, software tuned to the vertical is something that I think is really critical. Because if you talk to a real estate asset manager, a property manager, a broker, a landlord, whoever it may be, and you say, hey, you're a lot like a construction company, or you're a lot like an automotive dealer, they'll actually, that won't resonate with most of them, right? And so similar software that could work for them probably won't actually get through the sales and marketing process efficiently unless unless you start to tweak your language and tweak the product a little bit. And so we are seeing solutions, take HR for an example, that are customized and targeting a specific vertical, like CRE, that are actually achieving a lot more scale than some of their horizontal kind of, cross-industry brethren.